Hi, big week this week for consumer confidence and the general state of what is the largest consumer-led economy in the world, the USA. We finished with major bank earnings really clumped on Friday, and it'll be interesting to hear commentary from guys like Jamie Dimon on how they see the outlook for 23. Before that, we'll have had unemployment numbers, CPI numbers, so it's going to be a big week for the extent to which there's any possible soft landing in the economy. For oil, we're starting the week strong, and we're at such an important level at 80. What you can see is that when we get a big move upwards in oil, such as today, and we break through 80 Brent, the group really rips, and that's going to be the case if we keep going. Of course, the opposite is in effect. So we have at the part of the S curve, what we call the S curve in oil leverage, oil equity leverage to oil prices. Once oil gets below a certain level that the market believes is unsustainable, or above a certain level, essentially the oil equities stop following it. But in this area of 80 up or down, you'll see that the group moves very closely with the oil price. And the problem that we've got here is that after the Goldman Sachs Energy Conference, there seems to be a strong consensus to be bullish oil, bearish natural gas, to hide in refining, and to like international oil field services. That's clearly the consensus. Now remember that consensus is only wrong at the turning points, but there's clearly a significant agenda here for oil prices to go higher into driving season, which unfortunately is our call. Of course, we'd much rather be non-consensus, but it's better to be consensus and right than non-consensus and wrong. Among the names, we're just highlighting Delek as being the one that got most talked about last week at our refining conference, but we continue that conference on Friday as well, which will be a busy day, as I said. We have Phillips Petroleum and PAR, both independent refiners, if you want to think of Phillips that way, that will talk more about our overall refining theme. What was the consensus amongst the refiners? Again, the key thing I think is going to be the Russian export ban on products, and the key reason for the big move today in oil is essentially more opening up in China, which is clearly the balancing item. And there's, mega bull arguments that China could add 2 or 3 million barrels a day of incremental oil demand this year if they roll back after what we assume will be a major spike in COVID cases. And that's one of the key underpinnings of the bullishness on oil that we have out there. Combined, I think, with one important factor, which is going to be not having 1 million barrels a day of SPR download from the Strategic Petroleum Reserve by the US government. That's a huge amount of oil at the margin. And at the same time, we've been highlighting comments by Scott Sheffield, CEO of Pioneer, essentially downgrading the outlook for Permian growth, which is key to global oil supply growth. So everyone's agreed that oil supply is challenged. You need to be long oil field services because they'll get margin improvement. That refining remains tight because of strong distillate markets. You want to watch that carefully because that's a total consensus view as well. And that natural gas is oversupplied, notwithstanding the issues around Freeport and whether or not it comes back in January or in mid-year, which has been another story from last week, which would be 2 BCF of demand at the margin. Combined with the warm weather that we're seeing, particularly in Europe, natural gas is an obvious bear case. And then, of course, the bullish oil case is essentially based on more Russian oil out, the Russian export ban that will tighten distillate markets on products, the oil export ban on products, which comes in on the 5th of February. These are all pretty clear themes that are unfortunately pretty well discounted in the market. So we'll see how we get on. We're going to stick with being consensus. And although my partner Greg thinks we should do exactly the opposite of all of that and try and go long natural gas, short oil, etc., etc. But just to tell you what the setup is and what our basic call is, which is basically in line with what everyone else is saying. Have a great week.